The first thing you do when you get an income statement. Okay, so I see this one doesn't have a date. I just need to find my pen. This one doesn't have a date, so I put in the date. It's important because it's easier to quickly look at the top of your income statement when the year ends. And you see the year ends 29 Feb 22. So now when I look at my pre-adjustment trial balance, I ignore the balance sheet. I start with the nominal section, right? So if I look there, I look at my nominal section. I'm going to use that, right? I know, can you see it's basically my income statement. They give me sales, 822,943. Cost of sales, 427,750. Debtors allowance, 30. Now, after that, I look and now I know that which is on the credit side is income, and that which is on the debit side is expenses. I also remember if they give me an interest, I see here's an interest on fixed deposit. Is there any other interests? No. I know the interest is separate. Okay, so I'm going to start just by rewriting this. So I see expenses, I have rates and taxes, 2340. Water and electricity, 3240. Stationery, 1635. Now I see rent income is on the credit side, meaning it's an income, 31,920. Then I see bad debt, 255. Repairs, 1162. Telephone, 2520. Again, a credit one, bad debts recovered, 660. Insurance, 44. Then I need to go on the next page. I see, what do I see? Wages. Wages is 28,971. Bank charges, 1620. Packing material, 1122. And then I see interest on fixed deposit. And how will I know if it's an income or an expense? I see it's on the credit side, so it's an income. So I go to interest income, 3850. Okay, so now I already have everything in place. So now I can just do the adjustments. So the first adjustment, they say, the following transactions have not been recorded, meaning I need to record it now. Okay? We issued a debit note. Now remember, for the millionth time, when it's a debit and a credit note, debit notes and credit notes go together. We issue one and we receive the other one. But we always work our books on the one that we issue. Okay, so if we issue a debit note, it's a CAJ, and if we issue a credit note, it's a DAJ. Okay, now here they say we issue a debit note, meaning we are currently working in the CAJ. Okay, so what do we know? Go back into your head, into the AOL. So if I look at adjustment number 1 in the AOL, I've got a debit and I've got a credit. Now when I return goods. What is the rule for CAJ? Go back in your head to grade 10. I taught you, if it's the CJ, the creditor will be credited. But if it's the CAJ, we're going to do the opposite. The creditor will be debited. So in other words, I'm going to have a creditor's control on the debit side. Now, what did I return? Oh, I didn't return, but I'm asking for a discount on my repairs. So obviously we had an agreement that we're going to get a discount, and they didn't give me that trade discount. So now I'm claiming it back. What does a debtor's allowance or a creditor's allowance in effect do? It makes debt less. Okay, so now I want my expense is going to be less. So I'm going to credit repairs, which means my expense is going to minus with 37. Do I have a repairs?
Yes.
Where? There. So I'm going to minus 37. Okay. The second one is trading stock. Ne? Goods is most trading stock. So what does it mean if they say it's not according to the sample? So a lot of times when a rep comes to you, so a rep is a representative of the supplier, and he comes and he shows you examples of a product. Now that examples that they show you, we call that a sample or a monster. Okay? It's a monster. Have you never heard that? Okay. So in any case, it just means it's a part of the product that they are showing you. So they will say it's not according to the monster. Okay. So in this case, it's not according to the sample. So whatever they gave me, ne, to taste or see or order, what they delivered isn't according to what they showed me. Okay. So now I'm returning it. Okay. So if I return it, it means what's happening now. Creditors will minus, but my trading stock will also minus. Can you see at this stage, it's not going to be any entry in my income statement, because creditors is a liability and trading stock is an asset. Okay, it's not an income or an expense. But what will this influence? Trading stock surplus or trading stock deficit. So I'm immediately going to draw for myself a T account, and I'm going to put that 2,400 on the minus side. 4,200 on the credit side. Okay, are we sharp? So next one I see, they say a physical stock take. Shows the following, and now I need to make sure, are they showing me, are they going to tell me what I used or what's on hand? Now they tell me what's on hand, so this is left over. So I know this is my note for inventory. So if I have to do the balance sheet, my inventory is going to be those two added, right? But now I need to know what is happening in my income statement. So in my income statement, I'm going to go back to trading stock. Remember that T that I drew? So I'm going to look what was the balance of trading stock. And I see it's 66,125. 66,125. I also see now that my stock take says I have left 59,300. So I put that as a balance CO, ne? Okay, so my balance BD is also going to be 59,300. Is everybody with me? Okay, now if I look, let's quickly see. 66 less 4 gives me 62, ne? Or 61 something. But you can see it's more than the 59 that we have left. So I'm going to have a deficit. Another way I can do it, is I can say 42 plus 59 is going to give me 63 something, ne? Okay, then I also see this side is smaller than that side. So on the side I need to balance, it's going to balance on what? On the credit side it's going to balance? No. It's credit. It's definitely on the credit side because this is smaller than that. Okay, so it means I have a trading stock deficit, and I would please ask you, sorry, I just want you to be able to see. So I have a trading stock deficit, please. If this is not visible for me as the marker on the answer sheet, you go and you rewrite it, because can you see this is already 1, 2, 3, 4 marks. Can't lose it. So you go put in 66 125 less 26 4 200 less 59 300, and it gives me 2625. Okay. Next one is the stationery. So the stationery, they tell me this is what's left. What do I want to show in the income statement? What is used. So if I look at stationery, I see in total I bought this year 1635. That's available to use. I have left over 285. So what did I use?
135.
Okay. And you will always, you guys, just make it a point to see that you will always use more than what you have left over. Okay? So if you put the 285 there and you minus the 135, then you know, doesn't make sense. Why would I not use more? You will always have more in the used than the unused. Okay? So, with the stationery and the packing material and the fuel, remember they can give you any consumable. Don't get stuck on stationery and packing material, because I could say cleaning material. It's the same principles. I can say fuel for your vehicles. Same thing. Okay. Service material. Let's say I'm a plumber and I have service material. The service material that I used goes in here. The service material that's left is consumable stores on hand. Okay. So, let's continue. Any questions? I'm going at the speed of light because I want to finish this, that this week you can go through it again. Okay, so here we go. After the pre-adjustment trial balance had been drawn up, we receive a bank statement. So do you understand that these things have not been recorded? So the first thing I see is they credit my interest. Now you have to already know this. If this is a bank statement, and a bank statement works minus plus because it comes from the bank. It's not my books. Okay? So if they credit my bank statement, it's positive. Meaning I am receiving interest. Meaning if I go to my interest income, I now need to increase it with 97. You guys with me? Okay, so let's quickly go back again. Remember, my bank, this is my bank, in my books is an asset. And it works plus minus. Okay? So all the CRJ will go debit and the CPJ will go credit. The bank also needs, the bank like Absa or FNB also needs to keep track of the transactions that my business have with them. And in their books, they have an account of the transactions with me. And the bank statement is like a screenshot of their books. Ne? So in their books, They'll have a T account. What is this business name? What is this business name? Moodley Traders. They'll have a T for Moodley Traders. Ne? When we receive it, we will receive it in the format of a bank statement. Now for the bank, Moodley is a creditor. Why? Because Moodley puts money in the account, ne? But the bank needs to be able to pay it back to Moodley. So for Moodley, in the bank statement, for Absa, he's a liability. You get what I'm saying? So he works minus plus. So the CRJ, the deposits, ne, will go to the credit side because they owe it back to Moodley. The payments makes what he owes Moodley less. Ne? It's like if I ask Tiamo, can you please hold my money for me? Right? So I give him 1,000 rand. At any time, I can ask my 1,000 rand back. So can you see, Tiamo is now, he's responsible for my money. But it's a stress for him. Ne? Because he needs to be able to give me 1,000 back. Okay? So now if I ask for 200 back, now, can you see, stress is a little bit less because now he's only holding 800 rand for me. Okay. So, and then I have my birthday and I get another 500 from my mom. I give that to Tiamo. Can you see now his stress is becoming more again because now he has to be able to give me 1,300 back. Do everybody understand the concept why my account in the bank is stressful for the bank? Because they need to be able to give it back to me. And that's why they've got such wonderful control measures in place for if you do internet banking. Because they need to protect your money. Okay? Because that's their responsibility. I trust them with my money. So now if they say, if they say to me, they credit my account with interest. Can you see they wrote it on this side? And this side is the receive side. Okay? Does that make sense? So in other words, in my book, I'm going to put it this side because I received it. So everything that I do on my debit side, Absa does on the credit side. And what I do on my credit side, Absa will do on the debit side. Okay? Are we sharp? So, and they always try and catch you with that one. You will see it. When they give you bank charges, ne, and they give you interest. Now let me quickly show you the catches. If they give you bank charges and they give you interest, the first thing, if they give you debit interest, you have to remember to separate it. Ne? Okay? You can't add the interest with the bank charges. If they give you bank charges and they give you interest on credit, you have to remember this is positive and that's negative. So there's two ways they can try and catch you. So be aware of that. Okay, are you awake enough? Okay, let's go on. Next one. Next one is the bank charges. Now I already have bank charges. You remember, you're not going to write service fees. You're going to add this to bank charges. Okay. And can you see there they tell you they debit. And I know debit in the bank statement is negative. It's an expense for you. Let's go on. So, next one. Next one they say, on 18 February, a first and final dividend in the rand was received from an insolvent estate. The moment you see the word insolvent, you know you're going to receive and you're going to bad debt. Okay. Now, what do they say? We received a dividend of 25 cents, meaning my bad debt is going to be 75 cents. Ne? because we work that he owes me 100 cents. So for every 100 cents, 1 rand, that he owes me, he's going to pay me 25 cents. And the other 75 cents is going to be a loss. I'm never going to get it back. I have to bad debt it. So now let's see. They say, was received from the insolvent estate of the debtor who owes 1/2. The amount received was recorded, meaning they have already debited bank and credited debtor's control. This was done. But the 75 cents must still be written off. So how will I get it? 1,200 times 75 cents gives me 900. So in bad debts, I'm going to add